Startup founders struggle to refine their investor pitch. Practicing and getting feedback is very important. Here's a short snippet from a Pitch Force session of a founder delivering an investor pitch and receiving feedback.
Thanks for having me. I appreciate you all, and thanks to the panelists. Welcome to Glimpulse, where we share the grateful, loving impulse, Glimpulse. People are desperately disconnected. Loneliness and isolation are at epidemic levels globally. 13% of the world has anxiety, and anxiety jumps to 25%, 1 in 4 of our children in the US. It's a serious problem. As reported in the documentary Social Dilemma, existing social media and their business models are making these problems worse. What we thought would connect us is causing disconnection like never before. In response, 34% of Gen Zers are deleting their social media, and 45% of Facebook users are considering doing the same. 68% of people want deeper, more meaningful relationships, not more friends or followers. And that is what Glimpulse delivers uniquely. I'm PARESH SHAH, the CEO of Glimpulse. I'm a tech entrepreneur, Harvard MBA, and mindfulness yoga instructor. My co-founders are a Harvard PhD neuroscientist and expert in human communications, and the former CMO and COO of AOL, Kim Partol. Kim has managed 22 million subscribers and 12 billion in revenue, and is very bullish on what we're creating here. We have a great team of advisors, including the CEO of the Deepak Chopra Foundation and the co-founder of eHarmony. Between us, we've raised over $140 million and have had 4 exits. Using the best minds from neuroscience, happiness research, interactive media, and mindfulness, Glimpulse has invented an expression messenger experience that helps you create deeper, more meaningful connections in the relationships that matter the most in your life. And it starts with something simple. We call it a Glimple. Here you see a Glimple that a customer made for her dad. There's a cover art, piece of media, a personal note, and the final layer reveals the sender. Thank you. I see you. I like you. You get me. These are the types of expressions that Glimpulse makes fun, fast, simple, with your true friends and family. Glimpulse is positioned at the intersection of mindfulness, artistic expression, and relationship well-being. Our recent alpha test demonstrated Glimpulse's appeal across a spectrum of age groups. We'll initially be targeting mindful women as early adopters who will organically, virally attract adjacent relationships, such as their friends, their partners, and their children. Mindfulness apps are predicted to double from 5 billion today to 10 billion within 4 years. We are also a marketplace for artists who wish to share their talents and also monetize their art. Digital art's a $9 billion market, and it is growing very rapidly with the rise of NFTs. Among mobile messaging applications and social media, Glimpulse is very unique and positioned in the white space where audience intimacy is very high, with Glimples being exchanged one-to-one or one to a few select friends and family, the people that matter, and where mindfulness, gratitude, and well-being move from an individual practice into a relationship practice. To enhance virality and uptake, we've designed Glimpulse so you can send a Glimple to anyone, even if they don't have the app, and that's key. It can be as fast as sending an emoji or an animated GIF to a good friend or a family member. We've recently launched a $2 million raise, of which we've already closed to $500,000, and through 2 monetization models, neither of which requires advertising. By year 4, we expect to have $40 million in revenue. Thank you. My team and I invite you to learn more about Glimpulse, where we share the grateful, loving impulse. Thank you.
I really love your passion. I think you're a very good presenter, and I agree with everybody that you did a great job communicating the concepts. I think you have got a great team. I like that. I would say a couple things. One is, for something like this, I want to see how you're progressing and not just be told. So show more, tell less. And how you do that is, for example, with go-to-market, I'd love to, you left that out in your core presentation. You answered it in the Q&A, but I'd like a little bit more detail rather than, okay, we're going to do this, this, and this. I have no idea whether that's going to be effective or not. I think the go-to-market is probably the number one problem from my perspective that I'd like to see how you're de-risking. Okay, so for me, I'd like to, what does that mean? I am a fan of numbers, traction metrics. If you can show me, we did this in a, in an alpha test, and these were some of the metrics. We had this number of users, they had this level of feedback, or some a wow factor score, or something along those lines, something that helps me to say, 23 users in the alpha and 20 of them asked urgently, when are you going to release this? Some type of metric to help me understand that there's potential for traction, and not just we're going to do. I hear from too many entrepreneurs what they're going to do. What I want to hear is what they've already accomplished and how that past history allows me to project what the future curve might be. The final thing I would say is that I'd like to understand your funding strategy, and a funding strategy should be based on four key things, four types of inflection points: product inflection points, sales and marketing inflection points, biz dev, and intellectual property. I think you've got elements of progress on all four of those areas. They weren't really called out very clearly. And if you did call them out more clearly, I could piece together better the business value of what you're doing, and whether, hey, if we dropped in some cash, what's the likelihood of that giving us a good return?
Thanks, Sam. Let's Bob, we're over time, so if you could hold that. Sorry. We're going to ask you to vote again on the count of three. 1, 2, 3. We got three. We got 1, 2, 3. We got 12, and 9 is 21. Okay.
Every founder has some visionary goal to solve a problem or meet a need. In evaluating a startup pitch, we have to quickly determine if we see the same need to solve this problem, and if the founder is likely to do it in a way that a big market opportunity exists, and that the startup is going to capture that market successfully. Founders usually communicate big plans in their investor pitch. Quite honestly, though, unless the investor has a lot of experience with the problem or the industry, it's hard to accurately assess whether the startup will be successful in the 4 to 5 minutes that a founder has to pitch. Pitches that discuss existing traction can help skeptical investors sit up and pay attention. But how do you document your traction?
Well, it's helpful to look at traction based on where your startup is at. If you look at your company timeline at a high level, you launch your startup, then you build a product that you can sell, and then you book sales. That logically divides the life cycle into 3 stages: pre-product, pre-revenue, and post-revenue. If you're in the pre-product stage, focus on the validation traction. If you're in the pre-revenue stage, focus on the pipeline traction. If you're in the post-revenue stage, focus on the scaling and efficiency traction. Let's look at some examples in more detail. In the pre-product stage, examples of validation traction include number of customer meetings, number of customers who have confirmed pricing in a letter of intent, or response metrics to early stage outbound marketing tests. In the pre-revenue stage, examples of pipeline traction include the number of pilots you have in progress, the number of signups or downloads, or stats like daily or weekly usage rate. In the post-revenue stage, examples of scaling traction include revenue from the trailing 3, 4, 5, or 6 months, or the base of monthly or annual recurring revenue that you've booked. Efficiency metrics describe key aspects such as marketing effectiveness, stickiness, and friction. Examples include customer acquisition cost to long-term value, also known as CAC to LTV. Stickiness metrics around user retention is important, especially if your revenue model is based on subscriptions. Metrics around conversion rates can demonstrate efficient sales processes. There are many other types of traction metrics you can measure and report. This is just a small example of what's possible.
The traction you have with your product, sales and marketing, business development, and intellectual property represents 4 types of startup inflection points. These low-level inflection points roll up into high-level funding milestones. Smart founders then use these funding milestones as the anchor of their funding strategy. We have a deep dive class on how to build a funding strategy if you're interested in learning more about this critically important approach to raising startup funds. Just look for the link in the description to this video. We also have a funding strategy YouTube playlist if you'd like to check that out as well. That's it. I'm Sam Wong, your Startup CEO Coach. Good luck. If this was helpful, please like this video, subscribe to our channel, and click the bell to be notified when we release new content. When you do this, YouTube promotes our videos to others, which allows us to spend less time on our marketing and more time creating startup content for you. We hope this video helps you build a very healthy, fundable startup.